Hi there, welcome back to Market Fatafat and thanks so much for staying tuned to ET Now. Time now to bring on board Sneha Seth, derivative analyst at Angel One, and we have our researchers Anshin Ravinder who are joining us once again on the show. So good afternoon to all of you, and Sneha, let's come to you. You picked out RBL Bank for us on the charts. Tell us what it's looking like. Today, good 4% gain coming in. Last 6 months itself, the stock is up by 20%. Last 1 year also, very solid moves coming in. Do you see this continuing on the charts? Is this sustainable?
Yes, if you look at the chart structure, this counter was consolidating since quite some months, in fact, wherein on the higher side, I believe there was a resistance around 180, 175 zone. And finally, this counter has surpassed this month. It is already up by like 14%. And I believe looking at the chart structure and the volumes recently, it is looking poised for an up move at least towards 200, 214 levels is very much possible in this counter. So someone who wants to go ahead and long, or someone who's already holding the counter, may continue to hold for the target of 214. And for someone who's taking a fresh long, I would say that keep a stop around 189 and go long.
All right, moving on then from RBL Bank to Zomato, which is in focus today. Now, Zomato's food delivery business chief executive officer Rakesh Ranjan will step down from his position, and Dipinder Goyal, who is the founder and CEO, will run the food delivery operations for the next month. However, Rajesh Ranjan will continue to stay in the firm eternal, which is now better known as Zomato, of course. Now, the step is a part of the leadership rejig of the company to engage in every few, that it is likely to engage in every few years. But besides that, the stock had also slipped almost 5% in trade today on the back of the fact that Jefferies has raised concerns over rising competition in the quick commerce space after Zomato's shares more than doubled in value in 2024. Analysts at Jefferies predict that 2025 could be a breather year for the company, with the stock likely shifting gears in a phase of price consolidation. The brokerage, that's what the brokerage reported, and they said that the aggressive strategies of existing players and the entry of new competitors could lead to higher discounting, posing risk for Zomato's medium-term profitability as well. In addition to Zomato's Blinkit, competitors like Swiggy, Instamart, Zepto, Amazon and others are also actively competing for a share of the quick commerce market, and on the back of that, it could impact the profitability of these companies, and on the back of that, Eternal is down and out 1% in trade.
Well, so that's the news flow coming in on Eternal, now known as Zomato. We also have clarification coming in that this move is not actually taking place. Let's move on. And Ravinder, you've taken Divi's Labs for us. Tell us what's the news flow.
Well, as Divi's Lab is in focus, where Citi has come out with a note on Divi's Lab, and they have maintained their buy rating on the company and hiked target price to rupees 7,050 from 6,850. They say that the Divi's has a strong potential to become a key supplier due to its capacity expansion, and few of its drug is a next big opportunity for in Divi's pipeline. And we talk about capacity, and the company's current capacity is over 300 MT of intermediaries, and company has a plan of additional MT capacity of peptide-based GLP-1 drugs. And they say that the capex is expected as a product volume grow, and Citi expect Divi's to earn over $800 million in GLP-1 related revenue by 2030. And Divi's is Citi's top pick in the pharma sector. So back of this brokerage note, stock is up approx 5%.
Okay, so that's the reason Divi's Labs is in focus. Let's move on. And Sneha, Jio Financial is what you've picked out, a newly minted Nifty company. Tell us what are the levels you're spotting.
If you look at the chart structure over here, in last couple of sessions, we have seen a very strong move. The counter has made a strong base around 200, 204 zone. And looking at the chart structure, wherein this counter has managed to surpass the 20 DEMA. In fact, it has also managed to surpass 89 EMA yesterday. It looks poised for an up move at least towards 860, followed once we see an up move at least 260, then there are chances that it can head towards 285 to 80 zone. So at this point in time, I think someone who's already holding and was stuck at the higher levels, they may continue to hold. If someone wants to go ahead and take a fresh long, they can go ahead keeping a strict stop loss of 248 for now, and the first target would be around 285.
All right, moving on from Jio Financials on the chart to Ansh. You've picked out Lupin for us. Tell us what's the news flow here.
So the company has gained US FDA approval for Tolva 10 tablet, a generic version by Otsuka Pharmaceuticals. Now, the product is indicated to slow the decline of kidney functions in patients with autosomal dominant kidney disease, and Lupin holds an exclusive first to file status with this, making it eligible for 180 days of marketing exclusively in the United States. The tablet will be manufactured at Lupin's facility in Nagpur, which is in India, and with the launch date expected shortly. This approval also marks a Lupin strategic entry into a nephrologic segment. Also, if you see on chart, then we are seeing good positivity. Stock is trading with a gain of 0.8%. Also, it has been advancing for 5th consecutive session, and with this, it has also surpassed above its 100 and 200 DMA today, indicating strong positive bias in the market.
Okay, that's the reason why that stock is in focus. Lupin is in focus today. Let's move on. Sneha, keeping with the pharma pack, rather, Cipla is what you've taken for our viewers. Stock on the charts. Last 3 months, in fact, 9.6-10% move coming in, rather decent. But last 1 year, 6 months, it's been a rather flattish move for Cipla. What's your outlook on the charts? What are the next levels that you're spotting?
If you look at the chart structure for this for Cipla, I believe this counter was consolidating in the range, wherein on the weekly chart structure, if you see, this counter was taking support around 289 EMA on the weekly chart structure, and given a very strong comeback in last 3 weeks, I would say there is a strong resistance around at current levels only, that is 1545, 1550 is the zone which is the resistance zone. But I believe, looking at the comeback what we have seen in the last couple of weeks, we may head above this resistance zone, and this could be a very good indication if you look at the chart structure as a whole. I believe once we see an up move above 1550, this counter is likely to head towards 1610 would be the first target, and then it can head towards 1700 zone even. So at this point in time, I believe someone wants to go ahead and go ahead and long this counter with a strict stop loss of 1510, and on the upside one can expect a first target of 1610, and the next potential target will be around 1700.
All right, moving on then. Rabinder, you picked out Siemens for us. That counter is moving on the back of a brokerage note come out by Jefferies. Tell us, what does the note say?
Well, Siemens is in focus, where Jefferies has come out with a note on Siemens where they have maintained their buy rating with target price of rupees 3,300. They say that the Siemens was demerged on April 7, 2025, and the shares of Siemens Energy Limited were given to existing Siemens shareholder on April 14. And Siemens Energy India is expected to be listed in next 10 to 70 days. After listing, Siemens Energy is likely to become India's largest pure power transmission and distribution equipment company with a market cap of over $8 billion. This is bigger than Hitachi and GE, which are under $5 to $7 billion. And Jefferies expects Siemens Energy India to deliver a strong earning growth and around 40% EPS CAGR of between FY24 to 27 because of the solid T&D demand pipeline and better operating efficiency. Even after the demerger, the remaining Siemens business still has a good upside potential.
Okay, so that's the reason why Siemens is in focus. Let's move on and talk about an earnings candidate and a stock that has seen stellar recovery from the day's lowest point. In fact, at one point the stock was low by almost 4.5-5%, but right now has made its way to the green, and that's Tata Consumer that we're talking about, and almost a 1% uptick coming in on this stock. Like we have been talking about the stock all day in terms of their earnings. Just to revisit all of that once again, revenue, EBITDA and EBITDA margins have been in line. It's a beat coming in on the PAT front for Tata Consumer. Underlying volume growth has come in at 5.9%, which is a beat against our estimate of 5% as well. Segmentally also, they seem to have done very well, especially in terms of ready-to-drink. India Foods, Salt has done good in terms of its revenue, 13% revenue compared to our outlook of 11%. And however, the volume growth was slightly tepid over here at 2%. Tea volume growth has been strong at 5%. So all of those were the reasons why the stock should have been trading in the green ever since the get-go, but after an initial shock, the stock has managed to recover. Nuvama has retained their buy rating. They hiked the target price to 1,335 from 1,255 earlier. It's not only Nuvama, it's a bunch of brokerages that have gone ahead and hiked the target price of the company. On the flip side, Nuvama has cut their FY26, FY27 EPS by 1.3 and 1.7%. In terms of volume, Salt saw 5%, tea and India packaged beverages was up 2%, India Foods up 6%, and ready-to-drink segment 17% volume growth, looking rather healthy. All of that supporting Tata Consumer's move right now.
All right, that's Tata Consumers on the back of its quarter 4 results. But moving on, Sneha, you have also picked up Tata Consumers for us on the charts. Tell us what are you seeing on the charts? It has given some good moves in the last 6 months, especially amid a volatile market. Last 1 month also it has moved up some 20 odd percent, on the charts. Tell us from here on, does the positive momentum continue?
Yes, very much. If we look at the overall chart structure, whether you see a monthly chart structure, weekly or a daily chart structure, the overall structure is quite strong. As we said that this month we have seen a very strong recovery in this counter after a little bit of profit taking which we have seen. I believe this counter looks very much, chart structure looks very much, appealing at this point in time. In fact, I believe it can head towards the record high levels, and we may see it surpassing those levels even. So I would suggest someone who's holding along may continue to hold for the target of 1220, 1225. That will be the first target, and then once we see an up move at least above 1240, then possibility is very much likely towards 1320, 1340 levels is very much possible. So I believe someone who's holding along may continue. For a short-term trade, I would say once we see a decline, at least a dip towards 1140, 1150 zone, that would be the entry point for short-term traders. But someone who's holding for a long-term perspective, they may continue to hold for the target of 1220.
Okay, so those are the levels to watch out for on Tata Consumers, at least on the technical front. On that note, we'll step into a short break and keep it going with more buzzes on the other side, so you stay here.
Welcome back. You're tuned into Fatafat, where we are getting you all the buzzes in trade and why they are buzzing. So let's resume then. Coming to you, Ansh, Syngene International is what you picked out for us. An earnings candidate there. Tell us what does the report card for Syngene look like? It's declining away more than, in fact, was down 13%. It has made a slight recovery from the day's low, but nonetheless is trading with cuts of 12.4% in trade today.
Right, so let's start with revenue first. So revenue actually went up by around 11% on year-on-year basis to that 1,018 crore. Whereas if we talk about net profit, then that has fell by around 2.8% from 188 crore directly to 183 crore. Let's talk about EBITDA as well, and here we are seeing an uptick of 8.4% to 343.6 crore, whereas margin has actually gone down by more than 80 basis points to 33.8%. So the main decline today is on the back of weak management commentary. FY26 guidance was significantly below the expectations. Also, if we see on chart, then the stock has touched 1 month low level, has slipped below 20 and 50 DMA, but it is still trading around that 7th April low from where stock had actually given a reversal on upside. So keep an eye on that low level of 650 rupees.
Okay, so that's the reason why Syngene is in focus. But let's also go across and listen into the management, because after posting a weak set of quarter 4 earnings, we managed to catch up with Peter Bains, the MD and CEO of Syngene International, who says that they are expecting good growth in Discovery Sciences. Let's go across and listen in to the guidance that he has shared for the company in FY26.
Pipeline build that's broad-based across all 3 of the major platforms of our business. So we're carrying forward a lot of momentum in the large molecule manufacturing, and we expect that, which grew over 20% in fiscal 25, to flow through into 26. In discovery services, we see a strong pipeline build. One area where we're seeing that is the flow of pilot studies coming out of rebalancing of supply chains in our customer base, China plus one. And we've seen in fiscal 25, a high level of conversion of those pilots into full-grown programs, and we expect to see that momentum continue into 26. And also on small molecules, again, it's been a challenging year in 2025, but again, in the second half of the year, we've seen a number of programs and pilots come our way, and we would expect that to be expressed in an increased utilization in our small manufacturing facilities. So we have broad-based confidence and visibility in pipeline and flow through of business, which underpins our expectation that the underlying business in fiscal 26 will be in the early teens.
All right, moving on then from Syngene, and that was the management talking about the growth guidance. But coming to Sneha, Federal Bank is the name that you have picked out for us. The entire banking pack has been doing well, has been an outperformer in the market. For Federal Bank, tell us what you see on the charts for this one. This one's holding out decent. In today's trading session also it's up a percent. So from here on, what do you see on the stock?
If you look at the chart structure, last 2 months we have seen a decent, upside in this counter. Counter has taken a support. In fact, if you look at the chart structure, there is a higher top, higher bottom formation, and I believe we may see an up move. The up move getting extended at least towards 210, 215 is the level which I'm watching. And once we see an up move above 215, 217, I think will head at least towards 224 to 227 is the level one can expect. So I think from here on the chart structures are quite good. If someone is holding, may continue to hold. For a short-term trade, if someone wants to go ahead and long, can go ahead and long with a strict stop loss of around 197, and the first target would be around 207, and slowly then it can head towards 214.
All right, that's Federal Bank on the charts. But moving on to another buzzer in trade, and that's Biocon. Well, the company said that its board has approved the raising of 4,500 crores through the issuance of securities via methods including qualified institutional placements, rights issue, or other permissible routes in one or more tranches. Now, the proposed fundraising will be subjected to necessary shareholder and regulatory approvals. That's the news coming in on Biocon. Now, we do see the stock cooling off from the day's high. Right now, it is trading with cuts of 2.5%.
Coming in on Biocon after the fundraising announcement made by the company. But on that note, we're at the end of this edition of Market Fatafat. So Rabinder, Ansh as well as Sneha, thanks so much for joining us, and we'll wrap it up. It's a goodbye from me and Ankita and the team that put this show together. Thanks so much for watching.